You. Hey, Chris, how are you today?
I'm good, Vanda. How about yourself?
I'm well, I'm well. Thank you for joining me today.
Thanks for
So
having me.
you're going to talk about the one-time close construction product that you have, and I'm anxious to hear about it.
Awesome. Okay. So what I'm going to do is, right, I'm a broker and I broker to different lenders. And um, one of the ones that we just kind of signed up with is one called AFR Wholesale. And what kind of makes them special is that, yes, they have that one-time close construction program, but they also have a few other programs that are kind of part of the basis of that program, right? One of them would be like a VA renovation program, right? So if you have a veteran who finds a home, it's a fixer upper, he wants to get it fixed, have a contractor do it, he can do that and have it part of his financing and still get 100% financing. It could be done on FHA, it could be done on VA. You can also do, so it'd be like for your 203K, it'd be a similar process for those as well. They have a
Okay.
program called a Fannie Mae Home Ready program that allows a person to do a conventional loan and still get up to 97%, even 95% and up financing on a loan to value, right? So you can get a home loan for 95%, 97% of the sales price, but you can also get rehab costs included into the financing as well. And they use what's called an after repair value, and they go up to a maximum of 75%. But what's cool about this program is that it's designed for even allowing for luxury items, which is not allowed on a 203K. So luxury items would be something like, let's say, a pool, right? We're in Texas, man. It's the market for having a swimming pool, right?
Yeah.
And who doesn't want to have? And how many times do you see a house and you're like, man, this house is perfect if it only had a swimming pool, right?
Mm-hmm.
That's what everybody says in Texas. And with this program, somebody would have the ability to have that included in their financing. As long as the numbers fit and the market value can support it, which in our case right now we are at high points in our market value, so it could kind of work for them. The only thing with these programs is that they do take a little bit longer than your typical programs, right? Those are like the renovation programs, where you have your standard, purchase, which is going to be 30 days or less, right? On a regular resale or even new construction, 30
Right.
days or less if they want to close. In some cases, it could be like in 2 weeks. We have one recently we just closed for in 12 days. We got our clear to close. It's just,
What?
yeah, that was a different one, different scenario. I'll get into that a little bit later, because we also, that one's a really cool story, because we did a rapid rescore for her, got her 5/8 different better on her interest rate, raised her scores up by like 60 points. So it was really, really good story for her. But on these, right?
Let me ask you a question, Chris, before you
Yeah,
go on. The ones you were talking about, those are only if the person is going to live there, correct?
that's right. So for the one-time closed construction program, any VA or FHA programs are always going to be primary residence. VA can do a second home, but with FHA, it's always going to be primary residence. And for conventional, it is primary residence at this time. They don't have anything for investors under this program. So this would be for somebody who wants to either build, right? They don't want to, they want to, maybe they want to acquire the land in the home together. Maybe they own land and they just want to build on it. Maybe they want to build a modular home to
Mm-hmm.
save money. Maybe they want to do a manufactured home. What's cool about this lender is that they will do double wides, right? So somebody wants to buy a double wide, and I think as long as the double wide is like from 1976 or newer, it would be allowed under this program. So the other thing too is, like I said, it covers the renovation stuff, right? So the main thing with these programs is that, we set the buyer's expectations and maybe even the seller's expectations that it may take a little bit more time. But the good thing is that once it does close, everybody gets paid, right? I get paid as a broker, you get paid as a realtor, the builder gets his money. If there's any payoffs on mortgages that are existing, they get paid off. If there's a landowner, they get paid off. So that happens at the time of closing, and that's all before construction has even started. The biggest
Amen.
yeah, right. The biggest benefit to this program is that it's a one-time closed construction, where traditionally somebody had to do a construction loan. It's usually at a higher rate. They're probably paying interest only, but it's at a higher rate. And the idea is that they refinance it into permanent financing once the home is fully completed, right? But we have seen circumstances where people have had things happen in their life, man. I mean, what if you lose your job in that 6 months that it took to build your home? Or what if something changed? Look at the market that we're in right now and the economy that we're in right now. It's scary, right? Because things are changing on a daily basis.
Yes.
So, it's to avoid that. Once they're pre-approved and they're closed, initially it's a done deal. And about 90 days out from closing is when we would have the time or the opportunity to lock in their rate.
Okay.
Okay. So that's what I mean by one-time close construction. So what I was going to do, I was going to kind of show maybe a quick video. It's about 16 minutes. It's a really good basis from AFR Wholesale, who's the lender I would be brokering this to. And it's really kind of geared towards realtors in that market to show you guys what would be expected of you and what you could expect for your buyers. So
Okay.
I'm gonna go ahead and show that real quick, and then we can kind of talk a little bit about some of the specifics after that some more, if that's okay.
Okay. Thanks, Chris.
Okay, so I'm going to share my screen. And let's see. This one.
I see it.
You see that okay?
Mhm.
Okay, so it's one-time close construction to permanent loans, FHA, VA, USDA, realtor presentation. Okay, so let me go ahead and get that going for you.
I don't hear anything yet. You're going to have to talk through it.
Can you hear it?
Uh-uh.
Oh, you can't hear it.
Uh-uh.
Let's see. Oh, you know what? I'll probably have to do it like this. Can you hear that, Vanda?
No. Let's see.
Okay. All right, let's see. Let's pivot then. Maybe what we could do is I could share with you a different type of presentation, kind of go over some basics about the program. Oops, sorry.
Is it talking on your end?
It is. Yeah.
So maybe you didn't share your video, audio with the screen.
Well, it seemed like I was. Oh, you know what? I know what happened. I know what I did because I have it on my other screen.
Is it going in your headphones maybe?
Let's see. Let me drag this over to this one. Can you hear that?
Nope. Technology.
Right. Right. Yeah, we're doing it from home. Let me see. Let me try. So we do share screen 2. Let me make sure I am, like you said, sharing the share sound. Here we go. This should work.
Is what types of homes are allowed.
There we
Now
go.
we're going to get into some of.
All right, I'm gonna start this kind of from right here.
Today I want to focus on a government one-time close, which is FHA, VA, and USDA. In today's presentation, I want to talk to you
Make it
about
bigger.
the one-time close process to give you an overview of the process itself. Talk to you about some of the program details and a few guidelines, and talk about the builder registration process. The builder registration process and determining the loan amount is the responsibility of the mortgage representative. I do want to share with you the process today. Then we'll wrap up with the closing process, what to expect at closing, and how does the builder get paid? We'll talk about the draws and how that works as well today. And one-time close product is available for manufactured housing, modular homes, and stick built. One of the biggest questions that we get on a stick built, or that's your traditional site built, is what types of homes are allowed. Now we're going to get into some of the details, but at a high level, I have a picture here that's showing on the screen. The exterior of the home is framed in wood. That is completely acceptable. What if it's framed in brick or block? That is acceptable as well. If you have a home that has a steel exterior, that is not acceptable. No metal homes. Now it is allowable to have the 2x4s inside the home, the studs being metal, that's fine. Metal roofs are fine. But let's talk about the program itself. Our program provides the construction financing as well as the lot. When we talk about the land, it could already be owned. You can buy it from the builder. It could be inherited. You can be purchasing it from a third party, and we'll cover all of that aspects. So when the loan closes, the construction financing is in place. We pay off the lot at closing, and the permanent loan is all wrapped up in one. So what this means is there's no requalifying for the borrower. Also, there's no additional closing costs that are required. So there's no second closing. We have a couple of options for our builders and retailers. We have a draw program, and this allows the builder to get draws throughout the construction phase. Later on in the presentation, I'm going to talk to you about the costs that are associated with this with our admin fee. So there are 5 draws allowed during the construction phase. Now, if the builder or retailer wants more than that, that's fine. They can build in additional draws. The no draw program, this is a streamlined process. What happens here is at the closing table, the land is paid off if there's money that's owed on the land. The builder or retailer will build the home until it's completed. And once all of the paperwork and inspections are completed at the end, that's when we go ahead and fund the loan itself. Now this saves time. There's no third parties involved. It's a lower admin fee. And under the eligible construction types, we talked about this earlier, manufactured homes, modular construction, new site built housing. What's ineligible? Single wide manufactured homes, condominiums, multi-units. So if you have a duplex, 3-unit or 4-unit, or homes, multiple homes on one lot, that's not available. If you have a semi-attached or attached housing, that's not available. And then the unique homes, the storage container homes, log homes, metal homes, your condominiums, those are not available. Let's talk a little bit about some of the guidelines. Now, the permanent loan is either FHA, VA, or USDA. And there's some nice options that are available with VA and USDA. You have 100% LTV, and FHA has a 96.5% LTV. They do need to be owner occupied. AFR has a DPA Advantage program that the mortgage representative is aware of, and that is a 2% completely forgivable grant that is available for FHA one-time close. It's not available for VA or USDA. We do have a couple additional requirements. We have a contingency requirement when we're utilizing the draw program. So there's a 5% contingency that's built into the deal. And what happens here, let's say they run into some unforeseen circumstances or materials are just go through the roof. We have an option here that is available. In order to use the funds must be requested in writing. The builder is going to be aware of this. We're going to have a communication with the builder. It has to be approved by AFR and authorized by the borrowers for release of the funds. When it comes to the earnest money deposit, the maximum earnest money deposit are limited to $5,000. So as you're working with the builders, $5,000 and borrowers, the $5,000 is the max for EMD. Everything is going to get built into the one-time close loan itself. We talked a little bit about the land earlier in the presentation. Let's go through the options itself. The land can be purchased from the builder or the retailer. The land can also be purchased through a third party. If the land is purchased from the builder or the retailer, the cost of the land will be added to the sales contract. It'll be a separate line item for the land with a specific dollar amount. Now, if they purchase the land through a third party, that's okay. So what will happen there is you're going to have two contracts. You're going to have a contract for the purchase of the home, and you're going to have a contract for the land purchase. Now, on the land purchase, there's no additional requirements for EMD. So in other words, if they want to put more than the $5,000 EMD for land, they're more than welcome to do so. The land could also be gifted or inherited, that's fine. And if the land is already owned, that's okay. So if they bought it yesterday and there's a lien on it, that's going to get paid off at closing. If it's owned free and clear, that's fine. And if there's a lot of equity in the land, you can roll that land equity into the deal and use that for the down payment and closing costs for our government OTC loans. The mortgage representative will be aware of that, and when they're structuring the deal with AFR, they'll let us know. What happens at the closing table? So at the closing table, when you have a site built, a modular or manufactured home, there's going to be a maximum of $150,000 disbursement at the closing table to acquire the land. So what does this mean if the land is at, let's say, $175,000? Well, the difference between 150 and 175 is 25,000. The borrower would be required to come to the closing table with that additional $25,000. That does count towards their down payment. The mortgage representative and AFR will work together to determine how much money is needed at closing. When it comes to building permits, when you have a site built or a modular home, the builder is required to obtain the building permits prior to closing. Now, it's a little bit different on a manufactured home. If it's a manufactured home and the disbursement for the land is greater than $75,000, building permits are required also prior to closing. However, if it's $75,000 or less, building permits are not required at closing for manufactured housing. Let's talk about builder contributions and seller concessions. With FHA and USDA, you're allowed up to 6% seller concessions and or builder contributions. When it comes to VA, it's not to exceed the 4% plus the allowable VA items. So the builder or the retailer has to act as the general contractor. So they're responsible for the turnkey from start to finish. Everything is their responsibility. They're responsible for hiring the subcontractors. They're responsible for getting all of the site improvements done. The borrower is not allowed to do any of the work. The borrower is not allowed to hire any of the subcontractors. They can't perform any work at all. There could be no related parties like the employer, employer, or any relationships or identity of interest issues between the borrower, the builder, and the retailer. So how does the program work itself? What are the fees that are associated with, how does this happen? So AFR uses an administrative fee, and this is a flat fee that covers all of the construction-related fees, as well as the interim construction interest. It's important to note that the builder or the borrower does not make any payments during the construction phase. The admin fee is charged directly to the builder or the retailer, and that could be built right into the final acquisition cost, or the builder can bring that money to closing, either or. The builder, along with AFR, is going to determine the budget. And what happens is the builder will complete a cost construction breakdown form. And this comes after the loan is approved. And this is kind of like a line item. You know, what's the cost of the foundation? You know, what's the cost of the framing? What's the cost of the trusses? What's the cost of the roof? It takes all of these items and the builder associates a cost to these. And once the budget's completed, we provide this line item description back to the builder. And we'll talk a little bit more about that in the draw section towards the end. So let's talk about getting the mortgage and determining, you know, what is the loan amount, because we have to take a lot of things into consideration. Are there any builder contributions? Is there land cost? Is there payoff to the land? We have to add in the admin fee. We also have to add in the contingency reserves. So even though the borrower may have a contract with the builder for a certain dollar amount, that doesn't take into consideration any of the reserves, doesn't take into consideration the admin fee, the construction interest, etc. So all that has to get added back in for a new acquisition cost. So it's a three-step process. The first part is the builder registration. The mortgage representative is going to work with AFR to determine if the builder is already approved. If the builder's not approved, they're going to send a registration packet, and AFR will work directly with the mortgage representative to get the builder approved. The next part is the loan calculations. This is the part where the mortgage representative works with the builder and they provide us some detailed information. One of them is what's the net to the builder? And this is a figure that we use that the builder says, okay, this is the cost to build the home. This is the profit. This is my real estate commission that I'm going to pay for you, the realtor. If there's any taxes that have to get paid. So we get this number and then we build upon that. We add in the admin fee, we add in the contingency reserve, we add in the land cost. And if there's any payoffs, we also add in any builder contributions. So all of those start building that number up. And we provide those results to the mortgage representative. Once those are finalized, the disclosures will be sent by the mortgage representative, and they'll go ahead and submit the loan for credit and construction underwriting. You'll get the final conditions that are needed in order to close the loan, and this is all managed by the mortgage representative. And this is where a project review comes in. One of those specific documents is that cost construction breakdown sheet I was talking about earlier. We have a dedicated team members that are focused just on one-time close. They work with the mortgage representative to get all of the items needed for closing. So at closing, here's what to expect. Whether it's a draw or no draw program, the land is going to be paid off and funded at closing. The land must be paid off at closing. There's no initial draw to the builder or the retailer at closing. Once the loan closes and funds, if they want to get a draw for their soft costs, they're more than welcome to do so. Also at the closing table, the lender commissions are paid and generally the realtor commissions are paid. In order for the realtor commissions to get paid, the commission has to be noted on the sales contract and builder retailer has to complete our one-time closing disbursement and initial draw authorization. This identifies the realtor commissions that are going to get paid at closing. Once the loan closes and the loan funds, that's when the builder can start the property. They can't do any work until the loan is funded. Now, during the construction phase, our one-time close administrator is going to work with the builder or retailer. They're going to work with them on the draws, the projects, the inspections. What happens is as the builder or retailer complete items, they'll request a draw and we're going to order an inspection. Once we get the report, we're going to review the report and determine the draw amount. What we're looking for is each line item, whether it was 100% complete. If it's 80%, then we pay out 80% of that line item. If it's 100%, we pay out 100%. Let's talk about the home is built now and it's ready. So what happens when the home is built? A final inspection is ordered. The builder or retailer is required to provide us a placement survey, and they should build this into the cost. If it's a manufactured home, the retailers are responsible for detitling the manufactured home and converting it to real property. You have to have the manufactured home and the land converted to real property. The administrator is going to forward the final draw instructions. And then what will happen, the final inspections are done and the final funds will be dispersed. The borrower is going to sign a modification agreement that identifies their first payment, and that's traditionally about 30 days. And there's some things I want to make you aware of, are kind of our do's and don'ts. So don't let the builder or the retailer start any work until the project is funded. So once the loan closes and it's funded, it's okay to get started. Don't allow the borrowers to be the builders, the contractors hire their own subs. Don't allow family members to be the builder or retailer. Don't let the borrower think they can get any funds from the OTC loan. So let's say, for instance, they don't use the contingency reserve. that goes to the end of the loan. That's not a check that's cut to the builder or the borrower. Make sure you work with the mortgage representative. What will happen there, the mortgage representative will let you know the status all along, and make sure we set the proper expectations if they're purchasing land from a one-time close. It can take a little bit longer. And make sure you verify your realtor commissions. Make sure they're part of the purchase contract. And again, this allows you to make sure that the funds are paid at closing. I want to thank you for joining us today. If you have any questions, reach out to your mortgage representative and they'll be more than happy to assist.
Nice.
Yeah. Yeah. Thank you. Back on. Okay.
So they don't do any barn dominiums, no metal homes, because what
No.
I was looking for somebody that wants to do shipping container homes and a barn dominium, but they said those two are not.
At this time. Yeah, at this time, and you know, that may change in the future, right? As those things gain more in popularity, it seems like they
Yeah.
may become better with that. I think the problem is they just don't have those things in like the Fannie Freddie Mac um, guidelines. You know, Fannie Freddie Mac haven't really addressed those types of properties yet, so they can't resell those loans on the secondary market. So that's why those aren't available just yet.
Okay, and my other question is, do you guys provide a list of builders to a prospective client?
That's a great question. I mean, so this was, you know, a new program that we just signed up with, you know, and it's really kind of so we can diversify ourselves in this market, you know. So ideally, you know, my thought was to maybe start trying to market this to builders, you know, as becoming like their financing arm, because the way it's really kind of a builder's type of loan, because you kind of become their financing arm. And my thought is that, you know, from a realtor standpoint, as long as the builder, if I tell the builder, hey man, you know, I'm a mortgage broker, this is what I'm doing, you know, would you be interested in talking, go in and talk, but also let him know that, hey, you know, I have a lot of realtor partners. And if they bring you a client, you know, are you willing to pay them a commission? You know, and otherwise, I mean, how else are you going to get business, right? So, and I would think, you know, haven't talked to a lot of builders about this program. I did talk to another one. He seemed like he was kind of interested, but he already had a lot of stuff going on with banks. You know, a lot of times builders do use bank outlets for their building financing, right? Because then they can buy multiple lots at a time. They can do very special things and buy big packages, and then, you know, break them down into separate plots as needed in construction. So my thought is, you know, as a realtor, if you want to make money on this thing and this type of program, or kind of diversify yourself in this market, I would also try to reach out to realtors from your standpoint and see, you know, hey, were you willing to work with realtors? You know, if I have a lender who can show you a program to help you with your financing, is that something that'd be worth your while? And I'd be happy to go out there, and there's, you know, different presentations for builders to show them what would be expected of them. You know, the thing is, it's going to take probably your more, I'm not going to say sophisticated builders, but, you know, you have some contractors that are builders as well. And, you know, maybe they don't have as much experience, or maybe they're not they're comfortable with being very detailed on their reports and things that they write up for cost worksheets and things like that, right? You know, sometimes you have that contractor who gives you, okay, it's a flat $15,000 to do everything you want, and they don't itemize everything. But then you got that one contractor who's really, really good, who's very professional, and he lied on, it's okay for roofing, flashing, shingles, this, that, right? That's the contractor that, or builder that you would want for this type of deal, because there's a lot of stuff that they're going to have to fill out on their end. They have to be approved. And it's the idea is to protect not only the lender, you know, AFR as a lender, but it's to protect the buyer, you know, and make sure that they are going with a reputable lender. Excuse me, builder. I think what they look for is, you know, I think the roughly they're kind of looking for somebody who's got done at least 2 similar scopes of work in the last 2 years, right? So let's say maybe instead of doing a one-time close construction, you have a client who has a home and it's beat up. You know, you see it needs a new roof, foundation's messed up. You know, it's not going to sell by conventional means. You know, it's going to take some kind of hard money, or it's going to take some kind of special financing. Well, that could be a Fannie Mae Home Ready program, or maybe an FHA 203K, right? And you got to have a good contractor who's willing, maybe somebody who's experienced with you know, working with finance companies, and who's not afraid to give us his information and show liability insurance and fill out some forms and paperwork, and become approved. So that's why, it takes that 45 days extra, but, it can drag on if you have a builder who is not getting everything that we need from him in a timely manner.
Yeah, I have a lot for sale that I'm sure that somebody's going to want to build on. So if I market this along with that, let's see what happens. I'm gonna put it
That's my
out there.
thought.
Mhm.
Yeah, it seems like it's going to become more relevant, right? I mean, I think people are kind of getting tired of fighting over listings. So, this is a way to kind of differentiate ourselves, do something a little bit more niche. And I think as we all do more and more of these, we'll become more accustomed to them. But I mean, they follow regular FHA, conventional VA guidelines. So as far as from a borrower's perspective, they're good to go. From an approval standpoint, it's just all the various things. There's a lot to these loans. They're not simple. And that's why you don't see a whole lot of people that are offering these, because there is a lot to the back end of it. It does take a lot of resources to do all these things, but it's something that we want to tackle to kind of diversify ourselves and create a niche market and do something different.
Mhm. And do you know the maximum loan amount that
It's going
they-
to follow FHA and conforming loan limits. So it'll go by county, like for example, Fort Bend, Harris County, surrounding counties, the maximum for FHA is roughly about 428.20, I believe, or 426.20. So $420,620. And for conforming right now, it's like around 648,000. But and I think that's where it would max out. Now, I do have another lender that I'm brokered with, and they can do jumbo construction, I think up to 2 million. And I believe in those cases, it's 20% down for anything that falls outside of the conforming conventional maximum loan amounts.
Okay. Okay, sounds good. Well, I'm going to put this out there and market this with my lot and see what else we can get from it.
Yeah, that's awesome, Vanda. Yeah, I appreciate the opportunity to talk, and we'll talk later, and looking forward to getting some of these in this year.
And I will share this with my team.
Thank you, Vanda. Let me know
Okay,
if any questions come up. Talk to you later.
give me your information for the record, how we can reach you.
Yeah, I mean, you can either go to the website, hometrustfinancing.com. If anybody wants to reach me directly, just for questions, if you want to run a scenario by me, feel free to call my personal cell. It's 281-763-1876. And if you guys also go to our website, you can see reviews. I think we've got like over 60 reviews, all 5-star reviews from past clients, past realtors who've worked with us, and looking forward for more.
Okay, great. Thank you, Chris.
Thanks, Vanda. Talk to you later.
You have a good day.
Bye-bye.
Bye-bye.